Welcome to Trade Haven, where traders come to build habits that help them trade eternally. So today, man, I got a little banger for you. I want to kind of get into and give you some insight on why US30 is my only pair that my only asset that I really like to trade, and some tips and tricks on what makes it easier for me to trade than everything else. So first, I kind of want to go over what is US30. Um, US30 is the Dow Jones Industrial Average. Basically, it's the average of 30 blue chip US stocks. It's one of the oldest, in existence, oldest indexes in existence, and it's part of the big three. The big three being S&P 500, the Nasdaq 100, and the Dow Jones. There's definitely the Russell 2000, but a lot of people don't trade that, and a lot of people don't really know about that. But if you're an American and you ever watch the news or you ever listen to the radio, and hear um, how they report on different prices on what's happening. Um, oh yeah, here they go. But anyway, if you ever like watch the news or listen to like KBLX or any type of like news radio, there's always gonna be like at the end of the day, beginning of the day, they're gonna talk about the Nasdaq. They're gonna talk about the Dow Jones Industrial Average. They'll talk about the S&P 500, and they'll give you a list of like, oh, how many points did it rise? How many points did it fall? Um, and the reason that they do that is because this basically gives you these three, the S&P 500, the Nasdaq, um, and the Dow Jones. It basically gives you an overview of what the whole market is doing. Um, let's see. So like over here, if you focus on the right side of the screen here, um, you'll see like, oh, okay, like here are all the sectors of um, of the stock market, and basically the majority of these are red. So you'll be able to see, oh, okay, look at the top. It shows the Dow is going down, the Nasdaq is going down, and the S&P 500 is going down. And if you even look at the charts here, you'll see that, oh, okay, like this looks very similar, then the drop. This looks very similar, then the drop. This looks exactly the same as the other two, and the drop. So essentially, they're all tracking the same exact thing, just through different criteria, different stocks. But the stock market as a whole is moving in the exact same direction in a very similar manner every single day. Even the consolidation is very, very similar. So you could look at the three at the same time and definitely get a nicer picture. Um, However, the Dow Jones, if you notice, is down 300 points versus the Nasdaq 77 and the S&P's 29. Um, and so the reason why I like the Dow is because it gives me more room to make more money. If I was to trade the S&P at a couple of different lots, or if you trade options, if you trade futures, depends on how you want to go about it, but you have less money that you're making on the same exact sell. I caught the sell on this. Oh, I caught the sell on this. I caught the sell. I caught the sell, but I made so much more money going through here than going through either of these two. And so that's one of the main reasons why I focus on US30 or the Dow Jones. Um, so yeah, these are the three main stock indexes, and yeah. Next, I'll go into predictability. Fuck. Um, so yeah, let's get into predictability. In my previous video, I mentioned how liquidity is the best indicator that you can ever look for. And as you just saw with FinViz, um, we are able to know that all of the stocks are moving in a very similar manner at the exact same time, right? Other than some of them, some of them which are outperforming the market, the majority are moving in the exact same direction at the exact same time. Um, so we also know that the American stock market opens from 6:30 PST to 12 p.m. PST. So if I was to look at the volume, this is 6 a.m. to 12 p.m. The volume is higher than any other period of the day. 6 a.m. to 12 p.m. higher than any other period of the day. This day, 6 a.m. to 12 p.m. The volume is higher than any other period of the day. So that's where most of the orders are being taken and placed. 6 a.m. to 12 p.m. This is consistent, like I could continue to go back throughout years and years and years, and you'll see this exact same spike happen consistently at the exact same time. So if we know when liquidity is coming into the market, we know when we need to show up to trade, right? So if you trade the American stock indexes, or if you trade any type of stocks, I guarantee you're one of the people who shows up at that time. So that level of predictability is a great reason why I would want to trade this index. Um, so I kind of already went over the difference between the three, but I'm going to show you a little trick also. So there's something called the average true range. What the average true range tells you is it tells you the average of movement per time frame. So this is the 1 hour chart. So what we're looking at is every 1 hour is one candle, right? So it says the average of every one candle is 92 points. If I was to look at the S&P 500, the average of 1 hour's candle is 13 points. The average of the Nasdaq's 1 hour candle is 50. 50 isn't bad. I definitely traded the Nasdaq for a long time. However, I want 90. I want the greatest that I could possibly get for the exact same move that I'm trading, if I have the opportunity to gain more off of it, then I'm gonna take that. Oh damn. Let me go back to unnamed. For sure. All right, bet. So next, I'm going to talk about spreads. Um, I'll pull up a little visual for you guys also. Bid versus ask. Oh, that's perfect. So basically, on every single broker that you'll ever trade anything in your existence on, there's where buyers want to buy at, the price that buyers want to buy at, and there's where sellers want to sell it at. What your broker will do is your broker will create this little gap between it. And that little gap will always be where the broker makes its profit. The broker will connect this seller with this buyer, even though there's some space, and take a little bit of the profit right off the bat. And so the reason why I bring this up right now is because US30, S&P 500, the NASDAQ, they have the smallest spreads that exist in the market. Their spread is usually 1 point or $1, to be exact. And because it's such a small space, like you see, like it moved. Let's look at the ATR again. Okay, took the ATR off. That's cool. Um, And I've gone over before how I like to trade on the 2 minute. So we understand that generally every 2 minutes is moving about 10 points, right? And so if it's moving about 10 points every 1 minute, and keep in mind that this is not during the time where the stock indexes are open. If it's moving like 9 or 10 on a point where it's slow, imagine how many it's moving when the markets are open and when it's moving fast, like an example like over here. Um, and so basically that 1 point of difference that the broker is taking away from my pocket and your pocket doesn't really make a difference, you know? That little bit that the broker is taking is already paid based off of the amount that it's moving. And so the spreads are really small and the price is moving fast enough that the spread really doesn't make a difference. I'm willing to pay my taxes if I'm making enough that I don't care about my taxes. So I hope that makes sense, and feel free to ask questions if that doesn't, y'all. Um, so what I decided, and I kind of went over this in my last video as well, is that it's really important to have one or two assets max so you can learn about them specifically. And as you learn about those one or two specifically, you'll begin to figure out how you can be consistent and how you can consistently show up to capitalize the most. Like I already pointed out, the thing about the volume or the best indicator ever, the volatility, the liquidity. The liquidity always shows up at the market between 6 and 12. And so I know, okay, my trading hours should be based somewhere in between there. Once you pick something, stick to it until you find at least one pattern that's unique to you, and then move across the board and find something else if that's what you want to do. But finding one asset that works for you will definitely help you build out your strategy and become more consistent a lot quicker. Thank you. This is TradeHaven Eternal, and let's trade forever.